It has been a rough year for the semiconductor sector. First, companies such as AMD and Nvidia could not get enough chips to supply customers, and now slowing PC sales are hurting the industry. Shares of chip makers, they've been sliding all year, and it could get worse. Sozzi is here with his take on this one. Sozzi.
Yeah, nothing like dumping this negativity on a day when all the chip stocks are up. But nonetheless, highlighting a good note from Citi's Chris Danley, really one of my favorite chip analysts out there on Wall Street, and he's offering up some good reasons of why the sell-off in chip stocks and the SOX index, or the Philadelphia Semiconductor Index, might be really ripe for further another sell-off here. First, industrial end market demand is rolling over. Red flag there as well. Auto sales are in fact cooling. A lot of chips, of course, get used in various automobiles. PC and handset demand are correcting. We have heard that within the past 2 weeks from the likes of an Intel and an AMD. That PC correction is alive and well, and it has been very ugly for a lot of players. And even, too, the handset market as well has been correcting, as we learned from Qualcomm's warning yesterday. And then lastly, companies are more tightly managing capital expenditures. It is full on. It continues to be budget planning season in corporate America, and we're starting to see a lot of, I would just say, tighter CapEx budgets for next year. Maybe that means a fewer, less chips. Now, of course, there you can see that Philadelphia Semiconductor Index on the screen right there. That has been, it has not been a good year for that, not a good year for an AMD, an Nvidia, and many other players in that semiconductor index. Danley thinks EP estimates for chip stocks can tank at least another 20% from where they are now. That would be a big plunge and likely put further pressure, to his point, on the stocks, and that the SOX index could plunge at least 15% as those earnings estimates come down. And my take here, in search of a bottom, Danley brings up a couple good points on what would ultimately cause that bottom in chip stocks. For him, it is the end market no longer correcting, valuation just reaching levels that are truly trough, and no more CapEx cuts. And I'm trying to figure out why I'm in a basket.
Is that what that is?
I think that's a basket.
Is it a trash can?
It's a trash can. Wow.
A waste basket?
A waste?
That's a little aggressive.
Looks like a wicker basket, like a laundry wicker basket.
It's aggressive. It's a trash can.
I feel like
I know who made it, and it's a trash can. It's a trash can.
Okay. Well, we'll see what happens with chips. I mean, it depends on the time horizon you look at, because it's interesting if you talk to some investors and they say, chips, obviously, we're still going to need them.
Yes.
And so if you're an investor who's looking out 5 years, 10 years, you might have, if you have that luxury, you might have a different sort of assessment here of what this group looks like.
Yeah, look, AMD's business is still growing. Qualcomm is still growing. It's just a matter of they're not growing at the rates that they were, and the growth rates have really, really, really stalled. I think that Qualcomm report was just not good on many accounts this week.
Yeah, and signal a lot of things, many of which you pointed out in your take today, Saz. Appreciate it.